is day 7 of the Pride FX challenge, and here at Pride FX we are saying for the next 30 days we will be posting a video every single day on our channel. Welcome, my name is Montivino Valentine. I am the co-founder of the Pride FX movement, and here at Pride FX we do strive in helping people obtain strategies for a premium price at a free cost. Okay, so don't forget to like and subscribe, hit the notification bell so that you do receive future videos we do have on our channel. Okay, so today we are reviewing the GML trading strategy. One of the strategies that I am amazed with and by what it's doing, it's basically working on price action, take profit, stop loss levels, as well as some indicators that shows you the trend of what is supposed to happen in the market. Okay, so what you're going to get is a lot of indicators, and so I have not decided to use all those indicators. And so if you go over to template, I tried to use the GML trade software, and this is what appears: a blank chart with no indicators installed onto the template. So I have decided to create my own template for you guys so that you guys can use the trading strategy. With this template, please note that I have not used the background color to give you more detail. So what you can do is just change that to white so that you can see the descriptions of what you need to look for. So I'm going to zoom in today just to explain to you a few things. I'm not using the whole strategy. There's a lot of indicators, and as you know, with me is that I like a clean chart. I like to see what I'm doing. I don't like to complicate things. So I'm using a few of the indicators that I found for myself interesting, and if you would like to do the same, there is a lot of indicators you can use from GML, but these are the ones that stood out to me. Maybe it's version control for faults that the guy has seen in the indicators or in his strategy, but for me, if you add more, it does complicate things. And if you're looking for 100%, it's just making your indicators more accurate to what you are looking for. Okay, so basically let's get into it. I just wanted to press that the templates that you will be using is the template from Pride FX, designed from me, just to show you which indicators I found more interesting with the GML trading strategy. Okay, so the first one I found was the support and resistance indicator. And why I like the support and resistance indicator, it's always a nice thing to know where are you going or where are you heading in the market. And so if we're looking at this highest point, we're noticing that we're going to exit at that place, right? And that's so important when you are trying to find a trend. And so with support and resistance, the biggest ones will definitely tell you all the time where are you heading from that highest point. Okay, so very important to note that with support and resistance, some of the indicators, they do tell you when to look for sell trades and when to look for buy trades. So for instance, in the GBP USD, we are currently in a downtrend. We're going towards our place over here where we're saying that we will be exiting. So it's always a nice thing to have as a indicator, support and resistance. And so over here, once we get there, we're going to use these levels. Obviously, once we want to reverse up to the upside and go back to that highest point, from this point to that point, we are saying that once we reach this point, we're going to take trades, and obviously recognize that when price ever gets to these zones, they will have small reversals or consolidation phases to the downside and then continue up to the upside. Okay, so very important to use support and resistance as one of your foundations of your trading plan. Okay, and then another thing I like about this strategy is that it does tell you where the market is going in ways that we would use trend lines to focus on finding those trend breakouts. Okay, what this strategy does is it does tell you what are you looking for or what are you seeing on your chart. And that's the nice thing about the next indicator I'm going to speak about. It gives you names of what is going on in the market. So you will see there is a rising wedge you're going to see double top, you're going to see double bottom, you're going to see falling wedge, and head and shoulders. That's the 3 or the 4 of the stuff that it does pick up when it's looking for price action trading. Okay, and so what you also need to take note of is when you do see a falling wedge. Okay, and so like I said to you, it's always nice to know where the market is going. And so when you have a falling wedge, for instance, and price breaks out of that zone, you can take out a sell or you can take out a buy. Okay, so here we can see that the price has broken that level and decided to go up. Okay, and why is that? Because the wedge decided to break on the upside. It broke on the upside of this wedge, so that's why we can confirm that the trend has been broken. So now price will go and take a buy. Okay, and so over that period we can see price went down again, and there is a triangle. And also at triangles, they are like a falling wedge or a rising wedge. It's just that when it broke in that triangle, and depending on which side it breaks of the market, we can determine where the trend is going. So over here we can see that price decided to break on the upside of that trend, and that's why we took that buy. Now when you take a buy, please don't be emotional about your trades. Okay, look for the lowest point of the market, for instance, and take that buy, place your stop loss, and once you are in profit all the time, make sure that you are locking those profits. It's better to take something than nothing out of the market. Okay, better to be in a profit than in a loss. So over here we can see it broke up over there, and like I said, if your emotions decided to tell you that this market is still falling, you can see once you have closed in that loss, price went up. So make sure that you are practicing that over there. Okay, and then over here we have a double bottom. When you see a double bottom, just be notified that price is going to buy. Okay, and please take note that I'm on the 15-minute chart. So when you're on a 15-minute chart, you know you are just scalping in and out of the markets. Okay, so once you're in that trade, all you're going to do is place your stop loss at the lowest point of that area, and this is our lowest point. So I would have placed my stop loss over there, and we can see we went into profit. Immediately when you go into profit, the next thing you do is just lock profits. Okay, very important to do that all the time. And so then we were taken out eventually, and price came down. And so here is a head and shoulders, but a reverse head and shoulder. When they say reverse, it means it's on the bottom side, not on the top side of the candlesticks. So for a top head and shoulder, we would have had to have it over there, and if it's at the bottom, they would give you a phrase that we are on a reverse head and shoulder. Okay, and so over here we can see price breaks that zone. So what would you do? You take your buy trades, and eventually when you do go in profit, make sure you lock in those profits, and you can see that over there you could have made profit depending on how you are locking those profits. Here we had a double bottom, and obviously as we can see, price did move up to the upside for a while, and then eventually it does fall. So that's a double top. When you see them, make sure you take in those sell trades. Okay, and then we go into profit, and then we have a falling wedge. Now a falling wedge and a rising wedge, they do the same thing. Okay, if price ever decides to pierce through the falling wedge or the rising wedge, depending on which side, if it decides to break this side and the candle closes outside the rising wedge or the falling wedge, then you can take a sell. But if it breaks to the top side and the candlestick is also outside of the wedge, then you would know you need to take a buy trade. Okay, and once you take those buy trades, make sure that you are also locking your profits. Remember, I'm on the 15-minute chart, so I'm scalping to take minimal profits than what I would make if I had to use the strategy on the 4-hour chart. Okay, very important. Here we have another falling wedge, and we can see it breaks out to the top side of the market. So what are you going to do? You're going to take your buy entry, and like I said to you, do not be emotional. Place your stop loss at a reasonable place. Don't just place it where you feel like this is going to lock me in and if price ever comes there, I'm going to be kicked out. Okay, so if you place it too close to where you have entered, the problem is you are not giving the market space to do what it needs to do. So always remember that your emotions is one of the things that is supposed to be your enemy in Forex. Make sure that your emotions are intact when you are taking your trades. Okay, here we had another entry where price broke to the downside, and the nice thing about that is that we can see currently it is selling. Okay, now to speak about the GML, the one that's the eye catcher, the one that's selling for GML is the take profit, the stop loss, and the take profit levels. Unfortunately, why I would not use this is because it does refresh. Okay, so when I'm saying it does refresh is, for instance, let's just say we in the middle of the market over there and price decided to go up, these take profit levels would move up. So wherever you have put your stop loss and you have taken a sell, now it would show a buy entry, and so now your stop loss would have been at the bottom, and so when you take that buy, it might refresh to a sell entry. So that's the reason why I'm not using it. But if you are a lover of looking for those stop loss and those take profit levels without you doing it yourself, they do give you a stop loss over there. They tell you when to enter, and they also give you those take profit levels. Okay, one of the indicators that's also nice to have is something that tells you when to enter, where to put your stop loss, and where would your final take profit be. Now, like I said, in this market we are still going down to this side, so obviously this would be a verified one. But if you got a buy one, I wouldn't use it because we know that we are still going to this zone over here. Okay, so just to practice that one more time, I'm going to go over to NASDAQ, and please take note that NASDAQ does not respect support and resistance at all. Okay, because this market has been on an incline since the opening of the NASDAQ 100. And so just to show you what I mean, we need to go to the daily time frame for me to show you. Price has been on a rise, so you can see that even though those resistance areas are there, they are still going to be broken eventually. Okay, so we cannot say that the trend would still be falling. We can only say a trend can be rising on NASDAQ. And so the same thing applies to what I've said. We can see that when price breaks out triangle over there, we had that sell entry. Here we had one that went down there, and our breakout was over there for a buy, and so we could have taken that buy. And like I said to you, always keep your emotions in a place where you can continuously make profits. Okay, so even if the market decides to reverse and your strategy is telling you that that was a breakout, trust your analysis instead of trusting your emotions. Okay, and here we can see that that market went there and eventually it breaks out. So make sure that when you take in these entries, you are focusing more on the strategy and not your emotions. Okay, and then here we had a breakout. Like I said, I'm on the 15-minute chart, so scalping would be something that I need to implement. Okay, and so there we can see I could have exited there. Here I broke out of the trend for a buy, took that buy entry, closed in profits, and then over here we had that breakout with a rising wedge and followed by another rising wedge. So we could have been in a buy over there and looking for our exits once the market has broken for a sell or for a buy. And then here we had a triangle breakout for a sell, and so eventually you just have to look for those breakouts once you get those triangles, once you get those rising wedges. And then for a double top or a double bottom, here we have a double top, so we're confirming that price is going to sell, so we just take a sell. Okay, you don't need to think about it too much. Okay, and so if we went onto the 4-hour chart, like I said to you, on the 15-minute chart, we're looking for those easier exits, quick exits, right? Here is a head and shoulder, right? And we can see that price broke out and went up, right? So when price starts going up, how long are you going to hold? You're going to hold for 4 hours. More than 4 hours you can hold for 4, 8, 16, 12. So you'll be holding for days, or sometimes you'll be holding for a day, or sometimes a week. Okay, and then here we had price reversal. we had a falling wedge, and we can see that price broke to the bottom side. And so for the next few days, or for the next week, or for that day, you're going to hold those sell trades. Okay, and on this one, I would say for stop loss or lock profit levels, you'd have to wait for 4 candlesticks to close, which is 12 hours of a day, and then start locking those profits. So you can see the difference with 15-minute and 4 hour. With 4 hours, you are continuously taking your lock profits after 12 hours. With 15 minutes, you are taking those lock profits after 45 minutes all the time. With 1 minute, you are taking those lock profits after 3 minutes every single time, because they are scalping. And when you move on to higher time frames, you are holding for a longer time. Okay, so that's it from me, Montivino Valentine from Pride FX. Hope you have a wonderful day.